Welcome to the C-Suite at the Open video series with TMX Group. I'm Arnie Goldstein, Head of Company Services based out of Vancouver. Joining me today is Fred Earnest, the CEO of Vista Gold. Fred, thanks for joining me today. It's a pleasure to talk.
Well, thanks for having us on your program today. It's a pleasure.
It's our pleasure too. So Fred, Vista Gold, tell me about your business.
Well, Vista Gold is a gold project developer. We're focused on the Mount Todd Gold Project, which is located in the Northern Territory of Australia and is Australia's largest single deposit undeveloped gold project. It hosts 5.85 million ounces of proven and probable reserves contained in about 221 million tons at an average grade of 0.82 grams gold per ton. As it's designed, this project has the capacity to be Australia's sixth largest gold producer, with approximately 495,000 ounces of gold estimated to be produced on average over the first 5 years of the project, with cash costs of approximately $575 an ounce, making it one of the lowest quartile cost producers within the continent of Australia. We're focused on advancing Mount Todd, finalizing the permitting, and preparing the project to be developed with a partner.
Wow, that's a really low cost of production. That's impressive. Can you talk to me about some of the catalysts that can positively affect your business?
Yeah, absolutely. Our most important near-term catalyst will be the approval of our mine management plan. The Northern Territory Division of Mines is in the final stages of reviewing our mine management plan, which is the equivalent of a mine operating permit here in North America. And we're anticipating authorization in the coming months. Once we have that authorization, Vista will then hold all of the major permits for the development of the Mount Todd project. Looking to late 2020 or early 2021, another major catalyst would be engaging a strategic partner for the development of the Mount Todd project. It's our opinion that the debt and dilution that would be required to build Mount Todd on a standalone basis is not in the best interest of our shareholders. And consequently, we're seeking a strategic partner to develop Mount Todd, and thus allowing us to minimize dilution and maximize value for our shareholders.
Oh, I love it when people take care of their own shareholders. That's excellent. How would you sum up the investment proposition for Vista Gold?
You know, Mount Todd is one of the few development projects in a mining-friendly jurisdiction with considerable size. You know, as I mentioned, 495,000 ounces per year production over the first 5 years, low cost, and with all major environmental permits already in hand. Our stakeholder relationships and with the approval of the mine management plan, we feel that we offer certain advantages to a partner looking to add favorable near-term ounces to their production profile. As I've mentioned, we do not intend to develop Mount Todd on our own. We've technically advanced the project in an efficient manner and continue to de-risk it. We think that the economics are very compelling at current market conditions, and the project enjoys significant leverage to the gold price. Seeking a partner to help advance Mount Todd, with our goal being to maintain a significant ownership position and to fund our share of capital costs with little or no dilution, give us some distinct advantages. I think another point is that with just over 100 million shares issued and outstanding, our commitment to controlling dilution is pretty well established. Simply, I would suggest that if an investor is looking for demonstrated leverage to the gold price through a well-advanced and de-risked project in a mining-friendly jurisdiction, Vista Gold should be considered.
Well, that's fantastic. Any final thoughts you'd like to leave with your existing or potential investors that are watching this today?
Yeah, I would highlight three things. First of all, the economics of the project, as I mentioned, are very robust. At today's gold price and foreign exchange rate, the after-tax net present value at a 5% discount rate is over $1.6 billion, and the IRR is just slightly over 40%. Now, I should point out that our 2019 updated preliminary feasibility study, completed at a $13.50 gold price and a 70-cent foreign exchange rate, which is approximately the exchange rate today, reported an after-tax NPV5 of $823 million and an IRR of 23.4%. And so I guess what I'm saying is that this is an example of leverage to gold price at the project level. A modest changes in the gold price result in very significant changes and benefit for our shareholders. Second, I would remind investors that we have no plans to build Mount Todd on our own, and that seeking a strategic partner with the goal of a transaction that would minimize or eliminate project funding dilution is a very high priority for us. Last of all, if one looks at our share price performance relative to changes in the gold price, they will observe that we enjoy exceptional leverage to the gold price compared to many of our peers. And I would think that that would be something well worth considering in these days and times.
Well, that's a fantastic overview and what seems to me like a very compelling story. Thanks for joining me today, and I hope to see you soon.
Thank you.